All right, crypto family, we're going to talk about the Bank of Japan did raise their interest rate, the fallout, the impact to your crypto. Has it had an effect? Is it going to have even a worse effect? What's going to happen from here? We're also going to talk about the CPI report that came out and the impact that is having on the market overall. And ultimately, we're going to chat about kind of the long term here. When is crypto going to turn and all of that kind of stuff. So thanks for giving me a few minutes. Please hit that like, hit that subscribe. And if you're watching this on X, please give me a follow. I would greatly appreciate it. Okay. So like I said, let's talk about what is going on in crypto right now. It is down 0.4%, basically a 0.5%. The market is flat, and I think the market has continued to be flat. We're now starting to move into the Christmas holiday week. Obviously, that's coming up next week. We always see a little bit of flat crypto around that because kind of on a global scale, people start to pay attention or not pay attention rather to investments and things of that nature, kind of start focusing on family, friends, and all that goes with that. So again, I'm not expecting a lot to play out for the rest of the year as far as kind of the move ups or down. But Bitcoin, 87.9, XRP trading at $1.87. So all of them bounced a little bit off of the Bank of Japan impact. The Bank of Japan, excuse me, did raise their base interest rate 75 basis points. I think the reason we did not see a major fall off, I was expecting a little bit more of a sell off than what we've seen, which quite frankly has been none. We didn't wake up to Bitcoin below 80,000 as an example, and all of crypto down. I think because the Bank of Japan is kind of giving us signals that there's going to be really no further policy tightening from them, meaning they're not going to be tightening down or raising the rates. I think there was overall bullish sentiment around that. We knew that this interest rate increase was coming, and I think ultimately that bode or was built into the market. Okay, and I think ultimately it's additionally with the kind of the bullish comments from the Japan policymakers related to we're probably not going to raise rates anymore. Moving into 2027. I think all of that is a positive signal for kind of where we're at in relationship to them. Okay, so that is essentially an issue that has been taken off of the table. Okay, so where does that leave us? It leaves us in a place where we've got to look at kind of what's going to play out for the remainder of 2025. I've already kind of given you that expectation. And my wife's leaving. Thank you for giving me a kiss, baby. So the expectation of 25, I think, is going to be pretty much flat because of Christmas, things of that nature. I think rolling into 26, we've got the Genius Clarity Act. I think we're expected to get that fairly quickly in the first part of 2026. But ultimately, what's really playing out here is institutional money is what's keeping crypto up. There is institutional money flowing into all major blue chip assets. There is XRP ETFs, Ethereum ETFs, Bitcoin ETFs, obviously. And I think, that's the ETFs. But I do think that companies are not talking about it a lot outside of Bitcoin. I think that companies are buying and holding the native assets as well. I think that there are companies buying XRP, buying Ethereum, buying Solana, in addition to Bitcoin. But it is institutional money that is, in essence, kept us at the levels we're at, right around that $3 trillion market cap in the entire crypto market. It is institutional money that continues to kind of keep us propped up, if you will, because retail money is simply not here. I've talked about this. I've said this in a bunch of videos. And retail will only, you and I are retail money. Retail money will only come back in when the market's already moving really, massively. When we see Bitcoin start to take off on a massive run, when we see XRP, Ethereum, and Solana, and all of those start to take off, that's when the retail money will FOMO in. They'll have a fear of missing out, and they'll FOMO in. We've seen it time and time again. So what is that? I think we've got to have a positive catalyst event, something big to kind of kick off and get things moving. For the retail money to flow back into, because I think it's ultimately retail, hundreds of billions of dollars or more, to flood back in off of a catalyst event or a perceived catalyst event. Because, the same problems are still there. Inflation is still here. People don't feel like their money is going as fast or as far as it should. We had CPI come in. It was better than expected. I think it was 2.7. They were expecting like 3. I think it shocked everybody. The CPI, the Consumer Price Index, which kind of gauges inflation at a consumer level, it came in lower than expected. It really did. But really has had no effect on the sentiment. That's the key that people have around their crypto. People simply are not wanting to invest in risk on assets like crypto, period. I think there's a capital rotation event that'll probably happen in some capacity as well. A lot of capital moved out of crypto and moved into tech, AI stocks, things of that nature. And again, I think we'll have to see how this all plays out. So that leaves us in a place where we're all eyeing the first part of 2026. We need some type of a big event to kind of get things kicked off. And once we get something like that and we get a positive sentiment turnaround in the retail sector, that will bring retail money back in. As I've said, institutional money is still here. We'll continue, and they are continuing to invest. And I think that will move us forward.